Did you know that the US public debt to GDP ratio is now at 135%, higher than World War II levels and currently the highest in history? The average debt to GDP since 1790 was 35%. By 2020, that debt to GDP ratio had climbed by an extraordinary 100 percentage points above that, with the US public debt now well over $26 trillion. Experts predict that within the next few years, this ratio can go substantially above 200% in the US, but globally it is even worse. By 2000, total global debt was estimated at $100 trillion. It took the world 2,000 years to reach this embarrassing $100 trillion debt marker, but only another 20 years for that figure to skyrocket past $260 trillion globally. At this rate, in the next 5 to 10 years, total global debt is expected to reach quadrillion dollar levels. Other forms of media-ignored debts, including an estimated $1,500 trillion of derivatives and another $500 trillion in unfunded liabilities, add to the debt pyre. Altogether, the total global risk the world is exposed to in the financial system is a debt bomb weighing $2,300 trillion or 2.3 quadrillion, a number that defies every law of natural markets. We spoke to Egon von Greyerz, the founder of the Zurich-based wealth management firm Matterhorn Asset Management and a leading financial expert in macroeconomic risk and precious metal markets, for a straight talk on what this colossal debt bomb means for each and every one of us. First question in mind, when is this massive debt bomb going to detonate?
I mean, that is just massive. And none of that is actually comes from production of goods or services. It only comes from manufacturing fake money. So we haven't added anything to the wealth of the world except for fake wealth. This is what I'm saying, that when this debt implodes, and I'm absolutely convinced it will have to, then the assets will implode also to the same extent. So the process that we will see in the next few years, however long that will take, it's taken longer than I expected because we started with 2006 to 9. The financial system should have gone under then. They managed to save it. I don't think they will the second time.
So this is the second time this century in which we stand at the verge of a far more serious and unrecoverable financial crisis due to unconstrained and frankly immoral debt levels. What is different this time round? Why can't governments and financial institutions do anything about it? Let's listen to Egon von Greyerz' commentary.
In my view, what's going to change is the sheer weight of the debt. At some point, you cannot break the laws of nature forever. You cannot actually just print free money, issue free money, and charge nothing for it. If people borrowed a lot of money, interest rates would go up, and that would regulate it automatically. Right now, we're not in that era. That's not going to happen. Central banks are not going to raise interest rates to 5%, 10%, or 20%. Now, I think what they're indicating now is the beginning of a massive period of money printing, QE, whatever you want to call it, because there are problems in the system. It's absolutely clear. So I think this, what we've been expecting, you and I, that the markets are going to, bubble markets are going to implode, and money printing is going to increase dramatically, and it will have an effect on currencies, and therefore gold will reflect this also. So I think this is starting now, and it will accelerate. I'm concerned, of course, about the whole of the derivative bubble. I mean, I still think there is 1.5 quadrillion derivatives officially. They halved it to 600 trillion or so, but it's actually, I think that was just bookkeeping. I think the gross amount outstanding is still in the quadrillion, and liquidity in derivative works when people are buying, and banks are making fortunes.
Sure.
But when people are selling, there will be no liquidity whatsoever. And there will be no one standing on the other side, to pay for it. So I think that a big part of these derivatives could easily become printed money in coming years. And then you're into the quadrillions of printed money. I know it sounds dramatic and exaggerated, but it's a fact. When counterparty fails, that derivative, there's nobody standing on the other side. Therefore, the only solution is either to let the banks go under, or that short-term governments or central banks will print money. That's not a solution, of course, but that's the only thing that they know short-term. If we accepted the normal cycles, economic cycles, and the supply and demand cycles, then the economy would have tops and bottoms, but they wouldn't be at these levels. You wouldn't have these massive speculative tops that we have now, that we had 2000, and you wouldn't have the bottoms that we are going to see in the next few years either. But because they have basically ruined the financial system by blowing it up to a level where there is no remedy now. So in my view, they're doing a horrible job, and all they're doing is creating power for themselves and the few people who stand nearest the money, which is the bankers and some of the people who can take advantage of the money, the big investors, etc. Normal people are just getting more debt. They're not even aware of how poor they are, normal people, because on top of their normal credit card and housing debt and student debt or whatever, of course, they actually have, in theory, the whole burden of the global debt, that especially the national debts of all the countries that are all increasing exponentially. But people don't understand that actually they should have to repay that one day. Of course they can't, and they won't, therefore.
The supply and demand balance in the financial market has been broken and distorted beyond repair. The global debt bomb has reached an unprecedented size and continues to grow at an explosive pace. It is not a question of if this debt bomb is going to detonate, only a question of when. And when it happens, is it going to happen very fast through a cycle of inflation, hyperinflation, and then deflation? Here's what Egon von Greyerz foresees.
The scenario I see, because to some extent we will have inflation and deflation simultaneously. So we will have inflation when it comes to paper money will crash in value, and therefore a lot of goods and services the costs will inflate automatically in paper money, and therefore most of the bubble assets that we talked about before, stocks and bonds and property, they will deflate in value. So that's a deflation. But then as the cost of goods and services and foods, etc., will be reflected in the value of the money. So they will go up in price. So I see initially, so there'll be a combination of some values going crashing. We will have an inflationary, hyperinflationary depression, which means that some values will go down and others will go up dramatically. So, but I think, as I see, then there will be when you look at the value of your money, which will decline all the time, and you will need to print more and more money. That will be inflationary, and that is so that's hyperinflation in my view. At some point, then, when they printed lots of money to try to save the system, and this money printing is inflationary, then I think the world will realize that this has zero value, all this debt. And the weight of the money and the weight of the debt will basically crash the system. And then we will have a proper deflation in all areas of everything, which will, of course, affect banks, because the assets of the banks will become worthless then.
So how can we prepare and protect ourselves from the inevitable implosion of this massive debt bomb? Egon von Greyerz advises us to invest in assets that can hold their value when markets implode under their own weight, and when artificial fiat currencies, printed by the trillions to pay for that debt, lose what remains of their daily declining value. History confirms that the tangible answer lies in physical gold, while building our support system with the intangible wealth of family and close friends. Listen to his advice and wisdom here.
It'll take time, but once hyperinflation starts, it goes very quickly. And therefore, I see gold as the best protection against what's going to happen to money and to the financial system and to the banking system. I don't want to be a prophet of doom and gloom because I'm an optimistic person. But at the same time, one thing I've learned in life is to analyze risk and protect against risk. And this is what we would, more people need to think about that. But, we can't, the 0.5% of world financial assets that are in gold today is a ridiculous amount and much too small. And people at some point, and too late, most people will discover it when the value of the money is a fraction of what it is today. So we help people with protecting their wealth by owning physical gold. But that's a very small part of what we're looking at today. At least if you do that, you have a chance of financially coping with the times to come, because gold price will reflect all of this destruction of paper money, and therefore gold will go up. But there's so much more to it than that, because you're going to live in a society which will not be very pleasant to live in if all of this happens. So you've got to think about the most important thing, in my view, is organize your financial affairs to whatever extent you can, and then it's important to have a circle of friends and family, because that's what's going to actually make you survive in coming years. If we go back to the most important thing in life, and the kernel of society, which is family and a small group of friends, which has really disappeared now with the internet and social media, etc. If you get back to that, that's what's going to take you through a difficult period, in my view, much more, because you see in Greece and all of these countries that are suffering now, families stick together, and that becomes a self-supporting system. And I think that's the most important thing in the next few years.
For more expert views on macroeconomic risks, wealth management, and precious metal investment solutions, check out our other videos and click below to subscribe to our channel. Gold Switzerland with Egon von Greyerz.